We are back after a lovely 4th of July holiday. Trump has signed his one big buffoon bill. We're back on the tariff bullshit. We're going to be discussing that and much more today on Money Never Sleeps. Thanks for joining us today, everybody. As we get going, do us a favor, hit that like button, subscribe to the channel if you're new here. Remember, nothing Kevin or I say is financial advice, so please do your own research. Kev, it's good to be back. We had a nice little 3-day weekend with the July 4th holiday. We had Trump's bill getting through and being signed. And now, as we start this week, a week that is otherwise pretty light as far as data goes, it is back to tariffs. We're bringing it back around. We had Trump today, saying that he's going to issue 25% tariffs on South Korea and Japan. We have the July 9th deadline coming up here in just a few days for some of these other, extensions to end. So that is going to be the main focus this week. That's what the markets are going to be reacting to. That's what the markets are going to overreact to, because in my personal opinion, it's all just smoke and mirrors and it's so performative. Deals are going to be reached. It's just going to work out. People are overreacting. The panic selling is overblown. We're seeing some of it getting bought back right now. Fart coin looking very strong. Crypto as a whole has kind of bounced a little bit. I think each time we go through this, the dip in the markets becomes less and less pronounced, but it still happens, and it still gives you an opportunity, if you have your head on straight, to maybe make a little swing trade, a little scalp here and there. But how are you feeling today ahead of another just stupid week in the markets?
Yeah, I'm doing pretty good, man. I'm not surprised by anything that's happening. I think we kind of talked about this, how we said that there was a little bit of room for volatility going into today. Got a little bit of it in the market sell off. But here's the thing. We're still in the middle of summer. It's probably going to be low volume, low volatility moving forward. I know we're getting the tariff stuff back, being top of discussion. I will share some history with in a few minutes about why we could be heading towards something very complicated. And the tariffs are probably just the narrative to the underlying problem. But, this is just kind of what we've talked about, what we've expected. I'm not necessarily scared one direction or the other. I think actually what you said about, the dips in the market getting smaller, or when they do happen, offering an opportunity for, a short-term trade, scalp, kind of how you have to look at it. Again, not financial advice, but that's how I'm looking at it, right? I'm looking at fart coin every day, hoping we get a little bit of a pullback, add a little bit more. Things aren't necessarily breaking down yet. Keyword is yet, but, we can talk about the tariffs right now because it does kind of cause some problems going into Q3, Q4, that OPEX right around there. And we do know that there are some things that are coming due. A good amount of things are coming due, September, October of this year. And the markets just aren't pulling back necessarily any reasonable amount. What you're seeing is short pullbacks followed by the algos kind of buying things back. So it's a very simple and complicated time right now in the markets. It's the best way I could say it, because you're going to continue to trade within these ranges until you don't, and then that's when it gets kind of complicated. And we'll have to, go back to thinking like, okay, this market has the possibility of corrections, and they might be greater than we were used to in the summer.
Let's kind of look, this week, like I said, there's not a whole lot of data coming out. We have some consumer credit numbers. The Fed minutes on Wednesday are going to be kind of the most interesting thing to look at, to see what the Fed's view is of this whole situation, how they forecast the back half of this year, and then some Fed speakers as well. Next week is when things will get interesting. Should have some more trade deals done. Then we'll get some inflation data. And I think, we have about 3 weeks, just over 3 weeks until the next Fed meeting. Now, it's looking almost assured, about 95% probability, that there's going to be no movement in the rate, that they're just going to keep it there again. If we get some better than expected inflation data, we could see some movement in that as well. The job market, those numbers are just all over the place. Doesn't really make any sense what we're seeing there with, private sector jobs took a hit, but non-farm payrolls came in better than expected. So it's kind of a wonky situation in the labor market. Inflation going to be kind of the leading thing once we get those data points. But, I think what we're going to see, because there's this meeting in July, no meeting in August, and then middle of September they come back. I think we're still going to see things kind of, churn up a little bit here and there. Like we're going to see some dips, but I think the markets are going to, unless something crazy happens, I think we're going to see continued movement up. And like we've said, and we're going to keep saying, once they begin cutting rates, and maybe it's in September, and it kind of goes along the lines of what you were just saying a few minutes ago, Kev, I think that's when we're going to maybe see some volatility of like, okay, we could get some nice moves up here over the next 2 months. And my plan personally is to probably take some profit over the course of that time, heading into the last quarter of the year, and then just kind of chill from there. But I think that we are kind of set up to, and the charts are showing it too, and we'll get into those in a little bit, take some momentum to the upside. Yeah, some little swings here and there, but unless, hey, World War III could start tomorrow, who the hell knows? But just going off of the information we have now, I think these next few months are going to remain pretty positive until we get into the final 3 Fed meetings of the year.
I agree. And it's very possible that the U.S. is stable, but maybe something outside of the U.S. is, problematic. Going into August, this will be 1 year since the yen carry trade unwind. We do know that
year already? That's crazy.
Yeah, August 5th of 2024. So, we got a month or so to it. But I do want to dive into a little bit of history, something that I was looking up past weekend, something that I think a lot of people don't necessarily remember, but it comes when we had a year of extremely low volatility. That is something called the Asian financial crisis. I guess the best way I could just sum it up is kind of what this byline says. Financial crisis started in Thailand in 1997, July 1997, spread across East Asia, wreaking havoc on economies in the region and leading to spillover effects in Latin America and Eastern Europe in 1998. Why is this important? Well, what caused it was that Thailand's currency was devalued against the US dollar, and that just caused tons of systemic problems in Asia that potentially could have led to, recessions and depressions throughout the region. But the funny thing is the United States and the Federal Reserve kind of saved it, right? So this spread to, I believe, Thailand and Korea were the 2 main ones. It's really funny because when you look right now what's going on, Japan and Korea, very similar situations to what we're seeing back in 1997, where the currencies could absolutely go in very different, directions. It could be extremely volatile in the Forex looking to the end of this year. The dollar is at a really weak level. However, I personally think that there is more upside than there is downside looking at the dollar going into the end of the year. I think we've talked about that on the show, a couple of days ago. But when the dollar does get stronger, obviously other things have to get weaker. It depends on what the euro also does as well. But there is a really good window, I think, for currencies to absolutely fluctuate, given that we have the 25% tariffs on Korea and Japan now. We also know that we have a Fed meeting in July. We also have a BOJ meeting at the end of July, and we're going into the 1 year since the BOJ meeting that kind of led to the yen carry trade when they were kind of hawkish. So depending on how they react and how we react, there could be some major fluctuations at the end of the year. But the important thing to look back on this Asian financial crisis was that the Federal Reserve actually brokered a deal. There was tons of banks in the U.S. that had exposure to a lot of these, these Asian institutions, Asian central banks. South Korea, they pretty much what they did was they rolled over short-term debt to medium-term debt just to work with them. The thing is, you have to remember, you had a Fed and an administration at that time that were on the same page. You don't have that now, right? The Fed and the Treasury Department both worked together to broker that deal to kind of save the Asian economies. And it was quelled. Like, it was done pretty much by December of 1997 in Asia. The rollover effects did reach other parts of the world that following summer. But the important thing to look at is we have Trump, we have Besant, and we also have Jerome Powell. And two of those guys are trying to get the Fed out of the picture. And we have Trump, who's doing all the tariffs that's potentially causing a ton of volatility coming into those Forex markets. So when I look at what's going on now with, the 25% coming out to Korea, 25% going to Japan, and Japan is actually one of our closest trade allies. It's very funny, but I think it's also Trump trying to have them bend the knee. If they don't, or it causes some type of, shift in the BOJ's stance and they get more hawkish, we're talking about August 2024 mixed with potentially how the fallout of the Asian financial crisis in 1997 would have played out. Recessions are not good, especially in some of those other countries. If we do see recessions, you're probably going to see a lot of people unemployed in some of those countries. And if that's the case, you're probably going to see the price of goods go up. It could absolutely just lead to a plethora of problems that we know exist, and they could come to fruition in a stagflationary environment, right? And that could lead us into a recession ourselves end of the year or in the beginning of 2026. So it's something that I'm really going to keep an eye on, because this is almost hilarious that it's 28 years later. It's also 1 year later from August of last year. Trump is just, being extremely bullheaded here. And even with, Besant and Powell not being on the same page, this is a really bad place where we are heading into a low liquidity environment where we might not even be able to bail them out. That's the other thing too, right? Liquidity is going to be important. If certain companies and banks need to bail themselves out and pay off some of those 5-year loans that are coming due, they're not going to worry about other institutions. What we're talking about here, I guess what it boils down to is the perfect conditions for a fire sale in September, October, this Q3 into Q4 switch. So something we can continue to keep an eye on. It doesn't have to happen, but low volatility that entire summer 1997, and then something happened in Asia, problems all around.
I think as we look ahead to this, one area that could be a little, you could stand to benefit would be the UVIX. I mean, the VIX has been oversold for, a little bit now, and I think there's a lot of room to the upside, a lot of gaps that need to be filled there. So I think betting on volatility, come end of summer could be a winning proposition as well.
Absolutely. I have some UVIX just as a hedge if something does happen. It's going down, losing money each and every day because it's summer volatility being crushed nonstop. Again, that's just the summer algorithms. You're seeing the computers trade, pushing the market to all-time highs, keeping it within a certain range. It's going to happen. Volatility is going to get crushed. There's tons of products out there that are, inverse of volatility. So then by buying those products, there's less money for those volatility products. But going into September, October, I'm probably going to increase my position on UVIX, depending on what we see, right? Like I said, there's these windows of opportunities, OPEX for the most part, the first OPEX of the year and the third OPEX of the year in terms of quarterly OPEXs, very important. That's where you see some of the most fluctuation. If that's, what we saw in April is any indication what we could see later on in the year, probably going to bet a little bit bigger on volatility. But again, nothing right now, no financial advice. Going to continue to see how things kind of come in, but there's a good chance we can continue to see volatility crush into the end of the summer.
All right, let's do some TradFi first. We're seeing percentage point down across the board in the major indexes. Tech getting hit pretty hard. Tesla taking a beating today off the news that Elon is starting his America party or whatever the hell they're calling it, because that's what he needs to spend less time focused on Tesla. So we have the Magnificent Seven, almost all of them in the red today, with the exception of Meta, which is barely up. But we're seeing a lot of red in tech. Meanwhile, if you look, some of the longer duration bonds are getting sold off. Some of the short ones as well. The 3 and 6 month are like the only ones that I'm seeing getting bought. So maybe people are a little bit more bearish over the short term and want to lock in some rates. But what are you looking at here in the TradFi market? And then we'll get into crypto.
Absolutely. You're seeing things kind of top out, and this is what I said. I do think that the top of the market is necessarily in. I think that you're within a very minimal range, marginal range of it going up or down within, say, 50 to 100 points. I think that's a top. We're going to continue to see low volume and the price just fluctuate. It's very possible that last week, prior to the bill being signed in, was the height of the market, and we have just this slow bleed into the end of summer. Again, the closer we get to those loans being coming due, the more you're going to see equities sell off. And it doesn't have to be fast, right? It could just be people being like, okay, it's like a slow ramp up as the amount of loans that come due. Inversely, it would be a ramp down for equities. So you could see things start to roll over, stay flat. I think it's more stay flat into a slow bleed. We look at, where was it? Let's look at the Mag 7 real quick. We had this really nice run up on Tesla the past few weeks, from the 18th to this, I guess, today, the 7th, and you see that sold off right there at the top. I think a lot of this does have to come with what's going on in the tariffs. Talk about, again, more trade deals. It's going to be throwing some fluctuation out here. But the interesting thing is, and I've said this, is that you're not going to see the all-time highs for the Mag 7. You're going to see the Mag 7 kind of sell off. They're not going to be as strong as other things. You're going to see a lot of things, especially low market cap equities, low market cap coins, if we're talking about crypto, start to take off as opposed to the big ones, right? It's just going to be a fluctuation of money. Coinbase, obviously, yeah, I mean, the all-time high is obviously the IPO, but again, this is more crypto correlated. But you look at something like Google, I mean, that's a head and shoulders right there. Just looking all around, Meta obviously is a weird stock. I still don't know how something that created the metaverse that never came to fruition is still at all-time highs. Very interesting there. Looking at Microsoft too, pushing up. I think a lot of the AI euphoria is still there, but there's massive gaps still down here that are very attractive. You can see the MACDs are extremely overbought too. It's going to be kind of this bleed out, in my opinion. I just don't see anything between now and the end of the summer that kind of warrants that the top 7 stocks that have ruled this market for the past, 3 to 5 years are going to continue to push it up. I think we're going to see a rotation of capital. You look at some of the things that are going on here with the treasuries real quick. The 3-month is usually my indicator of, pain in the markets. You can see that we got these spikes in March and in April. Low liquidity environments. That's why you started seeing a lot of people sell those off, primarily Japan. But I don't think we're done. I think we're in that summer volume where, yeah, it's kind of compressed right here, but there is a good chance that we continue to see some of these spikes. I wouldn't be surprised if we get some spikes to 5%, maybe even a little bit higher than that, going into the end of the year. Continuous looking at some of these other shorter term durations, like 2-year. It's in a range. And I'm not saying that it's going to break down here. I think it's holding some pretty good support. There's a good chance that we could be pushing up a little bit higher in some of these yields. It doesn't have to happen. It really depends on liquidity, but there's a good chance that we see these things kind of fluctuate once the summer, I guess, kind of ends. That would be or something bad happens in Asia. You're going to see a lot of this fluctuation. Primarily, I would think that would happen if we do get some type of Asian financial crisis or one of these countries absolutely eat shit from the tariffs, because they're going to be selling off U.S. equities to pay off a lot of these things. That might be how we get to some of these higher ranges in the yields. Doesn't seem so right now when you're looking at the 2-year at 3.9% and the 10-year at 4.38%. But the thing about the 10-year here is that it's still above this channel. So honestly, I think that there is a good chance we could push up a lot higher, and that could be very short-lived. We might see 5.1%, close to 5.2 or something like that. If there's a huge crisis outside of the US, I think once the US kind of hits, shit hits the fan, you might see some money pour back into that. But that's all I got right now on TradFi. Should we look into crypto real quick?
Yeah, let's start with Bitcoin. We'll begin with the Big Daddy, and let's pull up the Bollinger Bands, because we had the man himself, John Bollinger, on Twitter last night with the tweet: Bitcoin looks to be setting up for an upside breakout. BTC USD more as the week gets going. So, on the weekly, these Bollinger Bands, the man who created them is saying that it's getting ready to break out. Who am I to challenge him?
Maybe. I don't necessarily know. Like, what we want to see when we see the Bollinger Bands for a breakout or like a violent move one way or the other, you want to see them closing in, right? You want to see compression of them. That's what you were getting here in March, and you got the violent move to the upside. Again, you can see it there. You also got it back in this little period in July of 2024, and look where it led to by December of 2024, right? You want to see this compression. Right now, I honestly think that what we're seeing is maybe a test up here of the top Bollinger Band, or the Bollinger Band comes down to meet this candle. Do I think 114, 115 is possible for Bitcoin? Yeah, it really is possible. Do I think it's long lived? Not necessarily, right? I think that you have a very interesting level of resistance on this parabolic trend, right? Even though we're above it right now, looking on the weekly, you haven't broke out significantly above it. And we can see that the MACD is not that strong in terms of what we're seeing with the weekly volume down here. You can see that the weekly stochastic RSI overbought, volume coming down as the price is still somewhat elevated from this move that we got back in March. Not necessarily the most bullish of things, in my opinion. Again, we have to wait and see what happens going into September. But is it fair to assume that this little, I guess this would be a bull flag right here that we traded in the weekly since, May, does this break out a little bit higher? Fair enough. I'm open to that possibility. But that being said, if we look at Bitcoin dominance, you're starting to see it roll over a little bit. Maybe one little last push up, all-time high, or not, I guess not all-time highs, right? I guess Bitcoin being introduced into the world would have been all-time high for Bitcoin dominance. But maybe for local and, for the past year or so, maybe we get to that high and it starts to roll over. Because I will say this about Bitcoin dominance for how long it's been, elevated. This is not sustainable. Not one bit. Let me get rid of some of this. Let's look at the EMAs. You're probably going to come down and test the 50 EMA at some point, maybe even the 200. But think about this. In the period of time that it takes to touch some of these, say a 7% drop in the Bitcoin's dominance all the way down to, say, a 14% drop. Think about what happens across the board. Either stable coins get stronger or alts, right? More likely that it becomes stable coins, and then you see, alts, then stable coins. I would expect to be the rotation of capital. Doesn't mean that they don't increase at the same time, though, right? They could both get stronger. One may be more dominant than the other. But looking at this and this, to think that Bitcoin is going to higher than maybe 115, 116, with how much time we have left, and Michael Saylor and all the people in MicroStrategy selling off all their shares on the inside, I just can't.
While they also prepare to issue more convertible bonds to buy another $4 billion worth of Bitcoin. Like,
that's the thing we have to be really concerned about with them too, right? And I'm just going to stop sharing my screen because I think this is important. That's fine if they do it, but they have to have revenue coming in somewhere. All their revenue is fucking unrealized gains, right? So think about when there's no money to borrow, no one wants to buy anything, no convertible bonds because it's just toxic and they need cash on hand. That's 2 months away. Maybe even earlier. It depends on how fucked some of these institutions are. If something happens in Asia, China, and they just say, you know what, we're just going to dump a shit ton of Bitcoin on the market. Who the fuck is going to give Michael Saylor money? Maybe they buy the dip, but I also think that those institutions probably offload some of those convertible bonds sooner than later because it's just like, oh fuck, we bought the actual top of Bitcoin. It's going to be very interesting given liquidity, and you're going to see, I mark my words, the most hated man in all of finance will be Michael Saylor. I
don't trust it. Like, Bitcoin is becoming really centralized with the amount that strategy is holding, with BlackRock getting involved. Like, a lot of this stuff, man, is
it's a problem.
It's a problem. I think it could mitigate some of the huge moves to the downside, maybe. But if they start to get in trouble, if strategy, gets in trouble and they start getting liquidated and shit, like that's a bigger problem. I do think it's funny. We had over the weekend all these dormant Bitcoin wallets that had, one of them, like allegedly one person, I'm blanking on his name, who controlled all these wallets at like $8.7 billion worth of Bitcoin, started moving it around. Everyone begins to panic. I think that was an overreaction. Like, I don't to think that someone's going to hold for this long, especially someone who allegedly has been, if it's the person that they were saying, I need to find who it was, like Ver or something. I don't know. I think to expect them to just start selling now with all the gains that they have on that, and with the how it's becoming easier to borrow against Bitcoin, I just think that was a bit of an overreaction from people who were trying to, there were a lot of big accounts on Twitter that were trying to spread panic. I'm like, oh my God, these dormant wallets are moving their Bitcoin. They're going to sell it all. It's time to freak out. I think that was a lot of people who've been calling for huge moves to the downside, just like grasping at straws to try to prove themselves right.
Let's feed the tin a little bit. There's tons of people that think that Bitcoin is a psyop, right? Obviously, there's tons of people that will continue to say that to this day. Say that Bitcoin is. What happens? It fails. Some new type of coin is introduced, but it's something that the institutions kind of have a grasp on. That's very possible if we are trying to wear the tin hats. If we're Joaquin Phoenix and Mel Gibson in the movie Signs, and we're just like, okay, this is the end of Bitcoin. There is definitely technical analysis that suggests this could potentially be the case. We're going sub 10K again, potentially. I really don't care because I have no Bitcoin, and I think this is gonna be fucking hilarious to see Bitcoiners and Bitcoin bros who are bought at say 80,000, 90,000, watch their portfolios drop, because I think Michael Saylor across the board is going to be the face of the fall of crypto. I genuinely believe it, because he's holding such a huge supply, might get liquidated. The price goes below level. I think his current average buying is somewhere in the 70,000s. I think we're going below 70,000 if we go into a recession. I'm not going to say that we're not, but I think it's a very good chance that we go below that. I think it's lower. Again, I don't necessarily care though. That being said, the thing that you want to see is if BlackRock starts offloading in some way and the price stays somewhat stable going across, right? If we start seeing a lot of institutional wallets dropping on, supplying the market, but the price stays somewhat elevated, whether it's through Tether or some other type of means, then, you might be kind of worried about MicroStrategy and some of the insiders that know that, hey, maybe something bad's coming to Bitcoin in the next few weeks to months with liquidity. Outside of that, we have to think about, I just lost my train of thought. I had a really good point too. It's great. Let's go to Fartcoin, and then we'll come back on how the markets are squeezing kind of in certain ways, and we can kind of just talk about that's liquidity and how it's probably going to be for the next few months. Looking at Fartcoin here, again, I love this chart so much. That's a perfect cup and handle, guys. Doesn't mean that it can't come down to this white line one more time. I honestly kind of hope it does, so I could buy some more Fartcoin. But looking at where it currently is here, you're just trading within a range. And I think this is still an inverted head and shoulders. We're going to come down for that last shoulder right here, bounce off of it. Maybe I thought the low might have been lower, but I'm looking at it right here. Maybe 103, 104, around that range is where it bounces off of. And then, you're probably going to go into price discovery once you break 163 or so. When you break 273, obviously, fireworks, end the rally mania. And again, this could coincide with this drop if Bitcoin decides to begin to fall. You start to see some of the money go into some certain things. Maybe this is the October 21 Shiba Inu run. We continue to say that. I think it's possible. Maybe not a $30 billion market cap, but maybe $20 billion. And, from where that currently is right now, I'm fucking happy. I think everyone else that bought, around $1 or less is going to be extremely happy, because we're talking about, $20 per coin or something like that. Outside of that, this is like the perfect type of low market cap thing that you could see money roll into, along with some of the other stocks that have just been squeezing. And I think we're going to continue to see squeeze across this market. Do you have anything else to say about Fartcoin, or I'll just jump into some of the squeeze?
No, I think it's set up well. Like, looking at the weekly, it's kind of, there's like this wedge that's forming, and we're coming to the tip of it, and it's going to move violently in one direction or the other. I can pull up my chart real quick as well.
Yeah.
And just share that.
I do think it pulls back. Like, I'm not saying pulls back, a fuck ton, but I think it pulls back to a level where, offers a good opportunity to get in. I still think the chart's bullish. You know what I mean?
Yeah, give me 1 second. I'm trying to get this figured out.
No worries. But yeah, I mean, I'm still waiting to, throw on a little bit more in the fart coin. My portfolio is so stupid. It really is. The more I think about it, because it's contingent on everything failing, but the things that go up are the things that traditional finance has just been betting against for so long, and I kind of believe that's the case. Yeah, that's a nice chart right there.
Yeah, I mean, if you look at this, like, and it's very similarly set up on the weekly. We're kind of trading in this range. Ooh, Farcoin's taking a hit right now. Actually, it was just up at 118.
Guys, I just fucking said it. I just said it. Like 2 seconds ago. I said we are gonna have a little short-term dump. There we go.
But if we're closing and we're consolidating into this wedge here, and I'm not a big technical guy, but I've seen this playing out, and it's held true for a while now. So I think we're going to continue to see it, and it lines up with the next Fed meeting and some of these deadlines for tariffs, and like the stars are aligning.
Yes.
For a big move on Fartcoin, and I think I'm on the right side of it. Being a Fartcoin holder, I really hope I am, but we'll have to see how it all plays out.
Yeah, I mean, I completely agree, dude. That like July 20, I would say July 15th, July 30th, there's a lot of charts that are just pointing towards something happening that could either send the market up or down. They're all trading within that range, right? What's the cutoff for that? July 30th?
This is August 5th when the paths meet.
Hilarious. What happened August 5th last year? Yen carry trade, right? So
yeah, and I mean, and this is July 30th, so like right before that. So I mean, it's set up for things to get a little bit weird. I'll pull up the weekly as well, and you can kind of see, like, as we zoom out on this, it's that weekly close Sunday, like this is the week of August 4th. So like that, it can't go too far into there. It's going to move in one direction and close above or below it. So I think that, we are in for the longer it consolidates and coils, the more violent that next major move is going to be. So
absolutely. And the thing is,
hold on to your butts.
You might not get a much lower low than what's coming next, unless you're buying literally at expecting 6 months out. Maybe it's not as high as it once was, right? Maybe we get this really big blow off top, and then maybe it's under $1 again in 6 months. Who fucking knows, right? We don't have a crystal ball. But looking at this here, this is GameStop's. And I know it looks crazy, guys, because it absolutely is. I have to get rid of some of this shit on here. But this is where GameStop is right now. Let me see if I can remove some of this stuff here. Get rid of that. Get rid of that. And you can see that we're getting very close to a 5,200 death cross. But you're trading within this triangle pattern right down here. Look what it ends. Monday, July 28th. That's right around the same time. There's a lot of things trading in very similar patterns. Now, I think that they crushed this. I think this thing is getting crushed into this, and it's not going to break out until the very end. But again, we know that when the 15 to 200 are about to cross, we always get an insane rally, right? Because it does everything it possibly can to fight getting that death cross. Doesn't mean that GameStop, it couldn't, it doesn't mean that GameStop can't go down lower. It possibly could. But I do think with how long this triangle has been kind of trading in, and we broke out of it once, and I think this is the retest back into the triangle, and we could have a really big move to the upside. I'm looking at GameStop. This thing's been trading in it for over a year, June of 2024, right? And when I've talked about this with the VIX, when it trades in these triangles and we get to the breakout, it can't stay in here. It has to go one way or the other. Could it go lower? Potentially, but again, we know that GameStop is sitting on tons of cash right now. We're in the squeeze season in the markets because this isn't the only chart that is having a really good time. This is Quantum. This is something we talked about. Heavily shorted, shot all the way up to $38 after trading a few months ago at $3.99. We look at IPA. This is another one that we were talking about a few weeks ago. I sold my shares because I was an idiot. I bought it like 99 cents. It's currently 162. FFAI, this is one that I actually have. And, for probably me talking about it is probably going to be the most bearish thing possible for the chart now. But looking at where it is, I was buying at, anywhere from 90 cents to $1.05. It's right now at 192. And it hasn't necessarily had that parabolic run up. But again, this is a UBS play that potentially, if GameStop takes off, UBS wants this thing to go up because it kind of counterbalances the losses that they get from the Credit Suisse, exposure that kind of fucks them over from GameStop. So looking at where we are in this market, it's low liquidity. It's going to continue to be these major plays that are very parabolic, and you're not going to see the top 7, the top coin. It's none of that stuff right now. I think we're seeing liquidity pull from that, make one last run at as much money. This is literally a casino, I think, at this point. But knowing that liquidity is drying up, that's when you see usually the most violent moves, both up and down. So something that we're going to continue to watch. But I don't know, man. I'm kind of excited for this July 30th date. A lot of things lining up. I'm excited for Faircoin, excited for GameStop. Not excited to be a central bank in Asia or, Switzerland. But outside of that, I think it's going to be very fun for people who've, been watching our show and paying attention.
All right. We're going to wrap it up on that note. Appreciate those of you who joined us. If you've not yet, like, subscribe, comment, share us out. All that stuff is appreciated. We'll be back on Wednesday to give the latest updates in the markets. Until then, stay safe out there. Have a great week, and we will see you next time.
Take care, everyone.